So I know you've heard all these real estate gurus talk about how you can get rich in real estate. No money out of pocket, do deals with no money. You too can get rich too. All you gotta do is take my $5,000 million course and you can get rich just like me. Well, today we're gonna dive in and talk about how I purchased this property behind us with zero money out of my pocket and what we're planning to do with it. And in the end, we're gonna talk about a mistake I made the last time I did this. So I know you're asking yourself, how did you buy a house with no money out of pocket? I mean, I heard it always has to cost something. Well, it does cost something, but it doesn't necessarily have to come from my direct wallet, so to speak. What we ended up doing was a cash out refi. We did this a few years ago and invested, but as you know, I'm sure, the market has appreciated. So I got to thinking about it one day and I think I can make that work. What if I just buy it? Now, I had no idea really how I was going to buy it yet. I wanted to see if I could get a traditional loan or go through my wife to get a traditional loan, because as a self-employed person, it gets complicated. So it'd be easier if she did it. So we were going to do that, but then I got to thinking, with all this appreciation that the market's had, it's been a while since we refied our house. I wonder how much equity we might have in it. So I talked to one of the local lenders. Local lenders said I could pull out about $15,000 more than what I needed to buy the property with, and my mortgage payment would be $18 less than what I was already paying. And then all closing costs was wrapped into the refi, because it was a refi. You can't do that on a regular mortgage, but it was all wrapped into it. So again, no money out of pocket. So in theory, with this cash out refi and paying $18 less a month, I got this property for free. Essentially, I'm paying $18 less a month and I got a free property. Now, some people may not agree with that if you talk about amortization and how much you're going to be paying the interest and all that down the road. And yes, that's true. But what we're planning to do is rent this property out. We're going to do a couple renovations to it. We're going to, redo all the flooring, not just for the datedness of it, but also for the durability of it being a rental. We're going to put down the LVP flooring, locked together stuff that's waterproof, so that it'll withstand a little bit anyway. We went in already and painted the bathrooms because they're a small space, easy to fix up. And paint makes a world of difference, even though it's over this vinyl siding, wallpaper, whatever it is they use in mobile homes. We just painted a basic white, painted the cabinets, put new trim around the window, put new trim around the mirrors, and then we're going to have somebody come in and do the countertop. I looked at refinishing the bathtubs and things like that, but I think I'm just going to leave them for now. They don't leak, they're intact. You put a shower curtain over it and you're never going to see it anyway. Now, what I am going to do also for durability is, you can see here that I don't know how, but for some reason this is a shower, but it has the regular mobile home wall on it. I'm not sure how it's withstood time or if they never took showers. I've asked around several people, I'm like, is this stuff waterproof? And they said no. So what we're going to do is put up it's called LVP. It's a fiberglass based board, I guess you would call it. You simply glue it to the wall and it makes it waterproof. I've done this in another house that we had, in the whole bathroom really, but it makes it waterproof and watertight. And again, that's for that durability factor of it being a rental. If I was buying this to flip, I would probably tear the whole thing out, put in a drop-in from Lowe's or Home Depot, something like that. But since it's just going to be a rental for right now, we're looking at more of the durability factor is more than the beautification. So after we get it fixed up, what are we expected to make off this property per month? Well, what we're trying to do, or going to try to do, it's a little bit more difficult with a mobile home, but we're trying to use the BRRRR strategy. I'm sure you've heard of it if you've looked at anything investing over the last several years. So obviously we bought it already. So now we're in the process of rehabbing it. As you can see, we're rehabbing some things. We're going to do countertops here too. So after we get it rehabbed and rented, then we're going to see about doing a refi on it. Similar to what we just did on our main house to buy the property with, is we're going to do a cash out refi. I think I got one lender that'll do it. Like I said, it's a little tricky on modular homes, mobile homes. They don't want to do them a lot of times, and interest rate might be a little higher, but working the numbers and talking to some other property management people in the area, that's a tip for if you're running numbers in your area. They've told me I can expect anywhere from anywhere from 700 to 900 a month. Now, I don't think a 1988 trailer not hardly remodeled is going to bring 900 a month. So I'm looking at the lower end. I'm looking at the 700. So if I'm looking at the 700, maybe 750 a month after I do a cash out refi and hopefully pull out more if I can than what I have invested, because the home is worth more now that I've fixed it up and new flooring, etc. So now this property will have its own mortgage, and after taxes, insurance, all the other BS, and a little bit of cushion money for when things break, I'm expected to bring in around $300 to $400 a month off of this property. I think that's pretty good. A lot of investors that I've heard of, if you've been on Bigger Pockets or any of the investing websites, a lot of people look for that 1-to-1 ratio deal. So if it's for instance, a $50,000 property, it should rent for $500 a month. To me, that is not a good deal. Because I'm looking at putting a mortgage in place with no money down, essentially. Now, if you were putting a mortgage in place and paid a big chunk of money down on that mortgage, then yes, you could make it cash flow. But I like to put as little money down as I can, still have it cash flow, and let somebody else pay it off instead of me. So here's where we went wrong the last time. We used the cash out refi as a down payment and did a traditional mortgage on the last property we bought 3 years ago. We had it fixed up. We did new flooring through some of it, mostly cleaned it up and painted it. We had it cash flowing beautifully. It was doing $600 a month, if I'm not mistaken. I mean, it was a ballpark, it was a home run deal. We put a for rent sign in the front yard after the first renters moved out, and well, someone called us and made us an offer that was kind of hard to pass up. Now, we would only own the property for about 6 months. We had bought it for about 25 at the time. Obviously, that's hard to find now. I think when all was said and done, we had about $5,000 in it, maybe. So we had, let's say, 30 in it. Well, someone called and made us an offer of $60,000. Again, we only had it for 6 months. So in those 6 months, we had potential to make $30,000. And we also found out we were having a baby, so it kind of worked out where we needed a nursery built, and we used that money to build the nursery. The problem was that all those profits we made off that property, we didn't really reinvest it. Yeah, we reinvested in our house, and it added to the value of our house. But what we should have done was take that 30 grand and go buy another property and do it again and build on this snowball. But we didn't do that. And now, true, it may have helped us on this property since our property is now worth more. Since we added to the square footage and appreciation on top of that, it may have allowed us to purchase this one. But I wish we had reinvested it, and that's where we really slowed our pace. Like I said, that was 3 years ago. And now we're really just now getting back into it again. So I hope this gives you some motivation to start your own investing journey. And check out these videos here, and I'll see you in the next one of mine.